Just let's connect with him. Let's understand that what could be the way forward for Indian markets. Could it be all about the dollar, or it could be back to basics, which is fiscal deficit, earnings, and then valuations? Nilesh bhai, good morning. Thank you for joining us. Everyone has a view on why dollar is going higher, how long will it continue, and why money is moving out of emerging markets. Nothing stays endless. How long do you think this long-lived dollar trade will continue?
Nikunj bhai, very good morning to everyone. Normally, it is buy on rumor and sell on facts. Since President Trump was declared winner of the American election, and unlike India, in US, there is a long period before winner takes over as president. Obviously, market starts discounting based on what announcements were made, based on what appointments are happening, and what are the hearings happening on confirmation in Senate or House. Undoubtedly, the agenda of new American government is America first. Either you are with us or against us. Announcements of External Revenue Service does show that tariffs will become part of the policy. US Fed is also be higher, and rate cuts which they had promised in middle of last year may not happen. Put all these things together, there is return of capital to America as interest rates are high, as fund managers believe that tax cuts and tariffs may give advantage to American stock market. Already it is commanding more than 70% of world stock market capitalization. So of course there will be an end to this, but seeing the unpredictability of President Trump, I guess market will wait for 20th Jan, see what happens over next 10-15 days, and then they will start allocating. Do remember that American economy is substantially lower percentage of global GDP than American market cap is percentage of global market capitalization.
Uh, Now let's look at the reverse, which is that this long dollar trade continues. FIs have been selling, they continue to sell. The long dollar trade, which on paper we can say is not going to continue, but it continues for another 3-6 months. What happens to emerging markets then? What happens to Indian markets then?
So in some sense, Nikunj bhai, no one wants to give easy exit to anyone. If FPIs continue to sell, undoubtedly DII will keep on bringing prices down so that they can get it at a cheaper price and cheaper valuation. It will be fair to say if strong dollar trade continues and FPIs continue to sell aggressively without price limits, markets will continue to go down as DII will not give easy exit. But do remember that FPIs are underweight to India. Compared to other emerging markets, our PEG still remains reasonable. And if our economy and corporate India does well, then if not today, tomorrow, the same FPIs may decide to come back. Fortunately for us, our peers are scoring self goals. Undoubtedly, Russia is out of radar for everyone. South Africa will be somewhere in the bottom. Brazil, thanks to communist policies, is also going probably towards there. So effectively in emerging market, the choices are China, India, and some of the smaller markets like Mexico, Vietnam, and so on and so forth. I think as long as we focus on our economy, continue to remain fastest growing major economy, corporate earnings growth remain in double digit, and governance standards remain better than peers, FPIs will eventually come back to buy.
Okay. How do you see the approach towards small and mid cap changing? Because what looked like a real golden goose now has turned out to be an ugly swan. Suddenly everyone is now getting hit with the volatility in small and mid cap stocks and also the price decline. Is the party in some of these small and mid cap stocks over for many months?
So many months ago in the same channel, I had mentioned This is the market जहाँ पे गधे घोड़े से तेज दौड़ रहे हैं. And fund managers like ourselves bet more on horses and less on donkeys. And we were underperforming the benchmark index. Today, as the donkeys have started falling, we have started outperforming benchmark indices. We were saying that low floating stocks valuation looks unreasonably high. And month after month, Nikunj bhai, we were seeing them going higher and higher and feeling helpless or stupid. Finally, fundamentals have caught up with valuations and those stocks are correcting. This is the market जहाँ पे दूध का दूध पानी का पानी हो जाता है, provided you can maintain your discipline. Undoubtedly, if we see this entire market move, the broad indices bearing Nifty Junior all have corrected in similar range, whether it's Nifty 50, whether it's Nifty midcap, whether it's Nifty small cap. And Nifty Junior has corrected almost double of them, partly driven by certain stocks. But as you were mentioning before, the indices are hiding what has happened in the broad market. Some time back, we had presented an analysis where we said last 5 years return were extraordinary. Broad market delivered 17 to 18% return led by small and mid cap, which delivered 27, 28% return. But before that, for 15 years, market delivered just about 11% return, driven mainly by large and mid cap, and small caps performance was 7.5%. And we kept on requesting investors to follow the asset allocation model. Don't be overweight in equity. Don't be leveraged by quality, not momentum. Focus on high floating stock counters, not low floating stock counters. Focus on reasonable valuation, not expensive valuation. Finally, fundamentals are catching with valuation.
So where are you picking your spots in this market? I mean, to be fair, not everything is good, not everything is great, but 25-30% of the market is genuinely looking attractive.
Nikunj bhai, undoubtedly there are some dark clouds on Indian economy. While we will remain the fastest growing major economy, but that will keep on coming down from 8% to big figure 6 now this year. The corporate earnings growth in September 24 quarter was below expectation. And December 24 quarter, as you can see from the results, is not that encouraging. It will be fair to say earnings expectation will get derated for FY25 as well as FY26. Keeping that in mind, one will have to focus on sectors where you believe earnings growth will be higher than market's expectation and valuations are still reasonable. If we see some of the sectors like private banks, IT, pharmaceutical, these are the sectors where valuations are reasonable and there is possibility that you will be able to find certain stocks which will deliver better earnings growth than market expectation. In IT, we believe it will be more mid-cap IT companies than large-cap IT companies which are leveraging artificial intelligence and machine learning to deliver cheaper, faster, better solution to the customers and getting higher share in the client order book. In consumer staple FMCG, we believe it is more likely to be rural-focused FMCG companies as Kharif crop has been bumper 8-year high. And with good reservoir level, Rabi crop should be good. And more importantly, a lot of money is flowing into rural households and pockets, thanks to a variety of beneficial schemes launched by state governments. In pharmaceutical, obviously, it will be bottom-up stories. But still, valuation and growth, one will have to check in pharma sector. This will be bottom-up stock picking market. The range between large, mid, and small will narrow down significantly in terms of performance. And despite this 10-12% correction, the expected return from the market will have to be moderated compared to last 5 years.
I'm just scanning through the markets and we don't have too much of market action, and minus Reliance there is nothing which seems to be looking like an incremental positive. So Nilesh bhai, where are PSUs headed? They were the bull leaders. They say that the leadership in a bull market never changes, but in this case the leadership in the PSUs has shaken a bit.
So in PSUs, again, repeatedly we have said that there are many PSUs where floating stock is limited. The floating stock which is remaining in the market is very, very small. It's like the tail wagging the dog. And many people invested in those low floating stock counter without looking at the valuation. Now reality is coming back and valuations are getting corrected as smart money has left those counters, and probably dumb money weekends were holding those counters. I think in PSUs, one will have to take a call purely on a bottom-up basis. All PSUs belong to different sectors and should not be taken it as one basket. There are PSU stocks which are reasonable from a valuation point of view, and where earnings growth could still be better than the market expectation. It could be in the banks, it could be in defense sector, it could be in engineering and infrastructure sector. There is also one segment of PSUs, which is oil marketing companies, where one needs policy clarity in terms of whether they'll have ability to price their product or not. So my feeling is that don't take PSU as one basket. Take it on a bottom-up basis and be wary of valuation, especially in those low floating stock counters where controlled floating stock has resulted into excessive valuation. And despite 30, 40, 50% correction, there may be still room for further cuts.
So good having you on the show. Thanks as always for your time.
Thank you.
If you like this video, then like, share and subscribe to ET Now.